In this video, I'm going to break down Parkway Life REIT's latest moves, including their massive expansion into Europe and what it means for your investment portfolio. Let's get into it. Hey friends, welcome back to the channel. I'm Iggy here, and I've been covering topics about stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 800,000 reads. I've covered over 500 videos and reached more than 250,000 watch hours as of September 2024. Let me start with some game-changing news that's shaking up Singapore's REIT sector. Parkway Life REITs has just made their first bold move into Europe, announcing a massive €111.2 million acquisition of 11 nursing homes across France. This isn't just another property purchase, it's a strategic entry into one of Europe's most stable healthcare markets. The deal gets even more interesting because they're partnering with DomusVi, Europe's third-largest aged care operator who brings over 40 years of experience managing nearly 600 nursing homes across Western Europe. What makes this partnership particularly smart is that DomusVi will continue operating these facilities under a sale and leaseback arrangement with a 12-year commitment. The properties are strategically located across key French regions including Bourgogne-Franche-Comté, Nouvelle-Aquitaine, and Occitanie, covering over 42,600 square meters and providing 850 nursing beds. These aren't just empty buildings, they're fully operational facilities with built-in rent increases tied to inflation, providing a natural hedge against market volatility. The REITs is funding this expansion through a private placement of 180 million Singapore dollars, with the units priced between 3 Singapore dollars and 80 cents and 3 Singapore dollars and 88 cents, showing strong institutional confidence in their European strategy. The numbers behind Parkway Life REIT's latest moves are truly impressive. Their European expansion through the €111.2 million acquisition of 11 French nursing homes will boost their total portfolio value to approximately 2.42 billion Singapore dollars. The deal is expected to increase distribution per unit by 1.6%, showing immediate value for investors. What's particularly noteworthy is their prudent financial management. They're funding this through a private placement of at least 180 million Singapore dollars, with units priced between 3 Singapore dollars and 80 cents and 3 Singapore dollars and 88 cents. Their latest financial results already show strong performance, with 9M24 DPU growing 2.8% year-on-year to 11.3 Singapore cents. Their balance sheet remains robust, with their all-in cost of debt at just 1.36% and 87% of interest rate exposure hedged. Looking at their recent track record in Japan, they've continued their strategic expansion with the acquisition of the Hibasu Higashi Sumiyoshi nursing home in Osaka. This latest addition brings their Japan portfolio to 60 properties valued at 676.8 million Singapore dollars, and impressively, they secured this property at 9.1% below market value. Once all acquisitions are completed by Q4 2024, their total portfolio will expand to 75 properties, positioning them strongly in 3 key markets: Singapore, Japan, and now France. Parkway Life REIT's latest financial performance demonstrates remarkable resilience despite market challenges. Their 9M24 results show a distribution per unit growth of 2.8% year-on-year, reaching 11.3 Singapore cents, which is particularly impressive given the current economic climate. While net property income experienced a slight decline of 2.2% to $108.5 million, this was primarily due to the Japanese yen's depreciation against the Singapore dollar. However, the REITs has effectively managed this currency risk through hedging strategies that extend until 1Q29. Their financial strength is further evidenced by their conservative gearing ratio of 37.5% and an industry-leading interest coverage ratio of 10.2 times, the highest among Singapore REITs. The REIT's strategic focus on healthcare properties and aging populations continues to pay off, with their portfolio now comprising 63 high-quality nursing homes and care facilities valued at approximately $2.23 billion. Their business model is particularly robust, with 98.6% of their portfolio protected by favorable rental lease structures. The healthcare property sector's fundamentals remain compelling, especially in key markets like Japan and Europe, where demographic trends continue to drive demand for healthcare facilities. With an all-in cost of debt at just 1.36% and 87% of interest rate exposure hedged, Parkway Life REITs is well positioned to maintain its growth trajectory while providing stable returns to investors. Looking ahead, Parkway Life REIT's strategic expansion into Europe marks a significant milestone in their growth journey. Their €111.2 million investment in 11 French nursing homes demonstrates their commitment to geographical diversification. The partnership with Domus Vie, Europe's third-largest aged care operator with over 600 facilities, positions them strongly in the European healthcare market. What's particularly impressive is how they're applying their successful Japanese expansion playbook to Europe. In Japan, they've built a portfolio of 60 properties worth $676.8 million Singapore dollars, and this experience will be invaluable as they navigate the European market. The REITs has shown remarkable financial prudence in managing potential risks. While currency fluctuations remain a concern, especially given their experience with the Japanese yen, they've implemented effective hedging strategies. By securing local currency debt for their European acquisitions, they're creating a natural hedge against currency volatility. Their conservative gearing ratio of 35.3%, which will improve to 33.3% after this deal, gives them substantial headroom for future acquisitions. The European properties come with 12-year lease terms and built-in inflation-linked rent increases, providing stable, long-term income streams. With Domus Vie's strong operational track record and the growing demand for elderly care services in Europe, this expansion sets the foundation for potential future collaborations and acquisitions across the European market. OCBC has raised their target price for Parkway Life REITs to $4.48, representing a significant upside from current trading levels. Their bullish stance is supported by several key factors: the REIT's stable 9M24 performance with a 2.8% year-on-year DPU growth to 11.3 Singapore cents, their sound balance sheet management with 87% of interest rate exposure hedged, and their strategic expansion including the new nursing home acquisition in Osaka. The REIT's conservative gearing ratio of 37.5% and low all-in cost of debt at 1.36% further strengthen the investment case. If you enjoyed this analysis of OCBC's rating on Parkway Life REITs, you're going to love my video on Singapore REITs, Best Analyst Picks for 2024, where I break down more institutional investors' top REITs recommendations. Click the link above to check it out.